All right, folks, welcome to lesson 10 of CU models, entry models. Now, in this lesson, you're going to see three main entry models. First of all, model number one. Second of all, true market structure shift. And after that, we're going to have the kiss of death turtle soup, right? And these are the main entry models we are going to trade, and you are advised to trade forever. Right? Practice these models 10,000 times and avoid looking for others. These are enough. These are more than enough. These have made me personally millions and millions and tens and hundreds of millions of dollars. And they have made my students a lot of money. And they have carved very successful trading careers. Right? Excuse me. Just it never goes away. Right? Probably is never going to go away. Right. So first of all, we have model number one. Model number one is basically the idea that they stab into, and when I say they, I mean the market makers, they stab into an old high with a thick up-close candle, and then they close below that thick up-close candle. That is model number one, right? Right, so if you zoom in on this right here, then you will see a thick up-close candle, and then they close below that thick up-close candle, and as soon as they close below, that is the entry trigger. You enter over here, right? Stop loss at the high of the candle, entry over here, and targeting the 50% and then the CRT low, right? Excuse me. That is the bearish model number one. Bullish model number one is simply reversed, right? You have a low, they wiggle around, they stab into the old low with a thick down close candle below the low, and then they close above that thick down close candle, and that is the trigger of entering on the bullish model number one, right? That is, and of course targeting previous highs one by one. The instant previous high, and then the 50%, and then the CRT high. Excuse me, right? Next up you have the true market structure shift. You're looking for a low, and then a high, and then a lower low. So the high broke the low, and then they break above the high that broke the low. As soon as they close above this convincingly, then that is a valid, true market structure shift. Look for them to wiggle around and then go higher, right? That is a bullish, true market structure shift. And a bearish, true market structure shift is simply that, but reversed. High, low, higher, high, breaking below the low that broke the high. And then trading lower in the second leg of an OTE. The true market structure shift is pretty much an OTE, right? And it can be either an OTE or a trade into the breaker, right? And finally, you have the Kiss of Death turtle soup, which is there's a pending target, right? And this is one of the easiest models because the move is pretty much done, right? So you have candle 1, candle 2, and then candle 3 usually is the candle that has Kiss of Death. Before reaching the target, CRTI for example, they wiggle around, they range, they turtle soup, and that right there is the Kiss of Death turtle soup, right? Which then pushes price to the target, right? So the last turtle soup before the target is the Kiss of Death turtle soup, and vice versa. Inverse Kiss of Death turtle soup, right? Right, so quick summary is model number 1 is, what is it? It's the up close candle that liquidated an old high, closed below, or the down close candle that liquidated an old low, closed above, right? A true market structure shift will either give you a breaker entry, which is the up close candle that liquidated the old low, or the down close candle, which was the cause, or the down close candle right before price raced up into an old high. And we'll see examples of that, right? Number 3 is the Kiss of Death turtle soup, one of my favorites, right? Now aim for at least 1 to 3 RR with these entry models, excuse me. Right? Usually you'll get a higher yield, but aim for at least 1 to 3. 1 to 3, not 1, 2, 3. Right? That's one thing. Excuse me. And let's see an example of each one on the chart we have right now. Right, so here we have a low, and then we have them stabbing into the old low. And before we see this example, let's see a more clear example, right? Here we have a low, and then we have this one specific thick up close candle stabbing into the old low. As soon as they close above this candle, it is a valid entry for a buy, right? And that is precisely what happened. Stop loss is normally going to be right over here at the low. There are methods to refine the stop loss, which is using, and this is something where you want to take notes, right? You really want to take notes at this part. Refining your stop loss. That is a whole new topic. But the low of the model number 1 is a good stop loss. If it's too far, it seems like it's too far away, then you can rely on lows that had a purpose, lows that served a purpose. For example, this is a low that rebalanced or retraded to a rejection block right here. This is a low that turtle souped, and a turtle souped low is usually a low which is safe, right? Because if you enter after the turtle soup, then normally, if done correctly, then you won't be turtle souped, right? Unless there is a turtle soup, which is rare and somewhat predictable. Another way All right, so turtle soup lows are good stop losses. And another stop loss, when refining your stop losses, is using lows that retraded to order blocks or fair value gaps. In this case, you can look within this chop fest for a stop loss low, but the safest low is going to be the model number one low, and the next safest is going to be something that either retraded to an FVG order block or rejection block, or a very clear turtle soup where people are stopped out before the up move, right? And then you go ahead and you start targeting. Now, let's say you targeted this high. First of all, you would have to have a valid reason. Is it a CRT? Is it a timed high? What is it? Why? Is it just for no reason? Second of all, you're going to look for, did the low form at a certain time, which is designated for creating lows of the week or the day or whatever you're trading. Excuse me. Meaning, if this is a weekly candle and this is a Tuesday low, right, then that is usually a good signal. If it's not, then you become more cautious, right? And this is the part where you keep taking rigorous notes. That's one aspect. The second aspect is you have to make sure to keep an eye on old lows as a reversal point, excuse me, especially if there is no, in this example, we're not going to see if there's a CRT or no, right? Or an SMT or whatever, or the time. But these are factors to keep in mind, right? So at old lows, expect a reaction. In this case, it was a reversal. And in such circumstances, you're going to learn how to either close the trade or break even, depending on the circumstance. But in most cases, if you see price reacting unfavorably, so you're bullish and it's being bearish, then what I like to do, if I'm in a profit, is simply take the profit and wait for a better setup, which serves me better, which gives me a better reaction. I'm in no hurry whatsoever at all, ever, to be in a trade. And that's the mindset that you should have. Right, here's another example of a model number one. Right over here, you have a low over here. And then you have this low also, which stabbed into the previous low. And I chose this example on purpose because it's an atypical model number one, right? Excuse me. Right, so in this case, you're going to go and focus on this, the largest candle, the largest down close candle, which liquidated the old low, which is this one, right? And I'm going to use this one as my model number one. This one specific candle. It's not a zone, it's not a bunch of candles, it's one specific candle I'm using to push price higher into this CRT high, for example, right? The first indication that this is going to reach the CRT high is the creation of the model number one, right? So you would enter as so. As soon as they close above, it is valid to enter right here. Stop loss at the low, targeting the old highs one by one until the final target, right? And something you have to go and weather out yourself, I can never be there with you, is weathering out the storm of the messy price action into model number one and all the way up, and all the reversals and all the chop fest, the emotions you feel as it's going down, almost hitting the target and then going back down again, right? That's stuff you have to learn and journal and get used to with more trade. The answer is more trades. Take more trades. Place more trades. I'm not saying gamble your house. I'm saying take more trades, right? Even if you take many, many small size trades, that can be very beneficial in as a tape reading practice, right? Which is getting used to the candles and how they print. Now, the actual reason this reversed is because right here and not here is because when there's an order block with a long wick to the downside, when there's a bullish model number one with a long wick to the downside, then usually you can use the closing price as a rejection block, and this is the power of rejection blocks. Right? Rejection block right there, which is also, it can be a doubling down on your entry right there. Excuse me. Then they go and push higher. This is the first entry model, which is model number one. Excuse me, once again. That's a lot of excuse me's for one lecture. Model number one. And then you have the second kind of entry, which is the true market structure shift right over here. Right? The true market structure shift right over there. Which is when they have a low and then they have a high, and then the up close candle before the rally down is the breaker. This right here is the breaker candle, right? And as I said before, the entry can either be an OTE or a breaker. In this case, it was the breaker, right? And usually when the breaker is a valid breaker, then the reaction is instant, and it is one of the few legitimate ways to get an almost zero drawdown trade. Right? Breakers are one of the best ways to get a zero drawdown entry. So they go and close above the breaker right here. They retrade into the breaker once and twice, and a lower time frame that's a range, which looks like a double bottom. So dumb money turtle soup traders would have been wrecked. Instead of this, they did this SMT, very likely over there, right? And they go higher. Then and this is this journey, they go and bump into a rejection block. And rejection blocks, usually their job is to do the following. Their job is to produce a retracement before reaching the final target. Rejection blocks are used to produce a retracement before the final target. That's a quote, right? Right, leaving behind these equal highs, and then it dumps, ranges, and then it smacks back up, almost hits the target, the CRT high, but then dumps below once again. And this right here is the kiss of death turtle soup. Why this? Why not this? Well, because you want the most recent turtle soup before the target was hit. Right, so in this, so you just saw all three models playing out right here, right? Low, and you have there a thick, large, down close candle. As soon as they close above that one specific candle, then the Kiss of Death Turtle Soup also has a model number 1 within it. And so does the breaker trade on the lower time frame. If you can trade the breaker by itself on the higher time frame, then the stop is the low of the breaker over here. Target is over there. Kiss of Death gives you another entry over here, and this goes into the topic of pyramiding, which is something we will discuss in later, right? In later. Right, so we have this right over here. So once again, you have 3 entry models. You have model number 1, the up close candle that liquidated an old high, or the down close candle that liquidated an old low. And then you have the true market structure shift entries, either a breaker or an OTE. And then you have the fastest entry, which is the Kiss of Death Turtle Soup, the final turtle soup before hitting the final target. The last turtle soup before hitting the final target usually happens in the upper 25% of the range. This is candle 1 over here, candle 2, and candle 3, right? And all these concepts you saw are within it. The breakers, the FVGs, the OTEs, the model number 1s, the fib, the breakers, the rejection blocks. Everything is inside the market profile. Everything is happening within candle 1, candle 2, and candle 3, right? Right, and here we have an example of a bearish breaker. The one down close candle, and there's a lot of debate around definitions, but I give you the final and definitive definition. There's no guesswork. You'll never see me change this answer like you see Michael do, right? And Michael, I know you're in here watching this and learning, so I don't change the answer and the concept 1,000 times. This is what a breaker is. This is what a breaker always has been, and this is what a breaker always will be. It's not all these candles. It's not this candle. It's this candle right here, right? The direct cause of the rally that liquidated the old high. Excuse me. Right, and of course we have there a beautiful almost zero drawdown reaction from the breaker. The breaker is one of the most powerful key levels when it comes to producing almost zero drawdown reaction. So the breaker is created right here. When they close below the closing price, when they close below the closing price of the breaker, then the breaker has been activated. They trade into it once, and that one little retrade right there, zoom in right here, that one little retrade into the breaker caused this massive dump into the low, right? And that's how you catch trades using breakers as an extra nugget, which is not meant to be part of the entry models, but there you have it, right? Right, so to summarize, you have entry model number 1 and 2 and 3. These 3 entry models are all that exists in the system as high quality entry models. There are more, I have more models, and you will have the chance to learn those models as well. But everything, like 90% of the trades, feed back into these 3. Either a model number 1, with its nuances and details, obviously, right? And a true market structure shift, and a kiss of death turtle soup. Right, model number one, here's some nuances. A thick up close candle is almost always more favorable than a not thick up close candle. Right, hold higher, close, activated, and vice versa. A true market structure shift can either result in a breaker, or it can result in an OTE. The intensity of the OTE, the way the OTE happens, how hard it goes down, does it go down into the 50% or the 60% or the 70% or the 886%? Those are all nuances of the OTE, right? Because sometimes you have the OTE, it goes just a little bit once and then it goes and rallies up. Sometimes you have an OTE where it goes really deep all the way down to the 0.886 Fibonacci level, and then it rallies higher, right? So even deeper than that. In this case, it'll be a failure swing, usually going to a rejection block, right? So those are nuances of the OTE. The kiss of death turtle soup usually happens in the upper 25% of the range, right? Because at the end of the day, this is a range low, range high. We're trading range low to range high. This is the stuff you see me doing ever since I joined social media, right? Range low, range high, range low, range high. Kiss of death is going to be in the upper 25% of a bullish range, or in the lower 25% of the bearish range, right? These are ideal. These are the officially designated rules and roles of each of these models. There are further variations, right? But that's not the norm, and you will learn the norm first, and then you will be allowed to go and delve into the exceptions, because exceptions don't disprove the rule, and exceptions don't create the rule, right? And now your homework is as follows. Your homework is to mark 24 model number ones bullish, 24 bearish model number ones, 24 bullish breakers, 24 bearish breakers, 24 OTEs, and 24 bullish and bearish OTEs, 24 bullish kiss of death turtle soups, and 24 bearish kiss of death turtle soups. That is a mandatory homework. I'll be checking it in the group chat. Right? If it was hard to catch the first time, then you have the liberty of rewatching this as many times as you want. It's all yours. Right? And of course, all of those, the homework is supposed to be done within your asset class, the one you choose. Don't bring me 10 charts of 10 different asset classes. No. If you are a Euro trader, then all of those examples will be given to me on Euro. If you are a Bitcoin trader, then I'll see those examples of the models on Bitcoin only. Futures trader on ES, and so on. Right? So whichever market you have picked to trade, you will, and my recommendation if you ask for it is, right now, there is choosing the market. Usually, you want to look for a market that's going to move a lot on the higher time frame. right? Because those are usually that gives you more larger range days with more potential upside. All right, so me currently, I'm focusing on Bitcoin, but that's a choice that you have to make. There's nothing wrong. All markets have a lot of money to be earned in each price swing. There's hundreds and hundreds of millions of dollars, if not more, in each price leg. Right, so there's no reason you can't go and grab yourself a couple $100,000. Right, so within your chosen market, I want you to go and send me the examples of the homework only after watching all the lessons first. Right? I hope you found this insightful. I wish you good luck, good trading, and see you in lesson 11.